presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up, and
awesome.
I know quality when I see it, or at least I like to think so. And I mean, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
Good afternoon, everybody. Broke that tiger growl out today. I was feeling it. Why not? We got markets in positive territory. We have gold, folks, right near all-time highs, and we got the S&Ps up by 7 points. We've had some two-way action today. We kick things off at 67.82 this morning. You dip lower, and we're coming back near those price levels. We're at 67.70. Take a look at this market, folks. That's an all-time high. Yesterday, you reach a high of 67.69, right where we are right now. So yeah, we had a little bit of a pullback, but all things considered, almost to the tick, sitting at highs. NASDAQ 100, we're up by 100 points, 25,115, 0.4% in the green for the NASDAQ 100. The Dow up by 0.2%, up 105 points, 46,830 in the Russell, almost leading the way, up by 0.5%. Bitcoin. Look at this run, man. Talking about a nice straight line move. 121,900. We are at the tick high right now on Bitcoin. You back it up. You have highs out there of 125,200. You know, I jump quickly, okay? And I think I have the article up. I hope I do. I think I do. Let's get over there. I do. Good. Check out this headline. We might be at a high, and I say it sarcastically. Bitcoin hits 120,000 for the first time since reaching record high. What does that even mean? I know what it means, okay? Hits 120,000 for the first time since setting a record 7 weeks ago. But folks, that is quite a surge, okay? But to say it hits 120,000 for the first time, I mean, it just doesn't make sense if you're reading charts, right? We got up to 123,000 the week of July. Now, these are futures, but you got up to 121. You got 125. Nonetheless, quite an acceleration. That's your weekly. It's been up all week. There's your daily. Coming right into those highs that we had in August about 6 weeks ago. You check out Ethereum. Not quite at those levels, but 45.44. You back Ethereum up, and you still have the highs out here of 49.02. How about that? Ethereum didn't make it to those highs just yet. You're about as close as you could get on that last acceleration, up to 48.80. Right? What, $22 away from all-time highs? Almost 4 years later in crypto. Nonetheless, higher prices in crypto. Jump over to the dollar, as I was talking about in the top of the hour update there. And it's almost like a case, right? We get a pullback in the market, dollar strength. But boy, the trend right now is higher market prices and a weaker dollar. Even when you get the bounces, you get some give back. The dollar right now, we're up by 10 pennies basically on the session. Okay, you got an acceleration all the way from 97.50 to 98.15 about. 98, what's the high? 98.13. And we're at 97.81, but that caused a little bit of turmoil in the metals market. As you had some dollar strength, you had a gold pullback. But again, gold, 38.80. Down by $17 on the session, and silver down by 2.1% right now, or $1 to 46.60. And before we jump to Tesla, you know, there wasn't a real move in yields, right? There was just a move in dollar. So no real reaction in yields. We saw the reaction yesterday in yields on the private payrolls number. Higher price, lower yield. We're right back to where we were on the higher price, lower yield, and we got a 10-year right now approaching 4.08. But the dollar move? Okay, Tesla. It seems like there's a lot of stories in this market right now, buy the rumor, sell the news, and this is one of them, folks. You're coming into this area from last year. You're just over the area of 2021 for the highs. Okay? Because these were strong numbers. Sales surged to record on a rush to snag U.S. tax credit. Buy the rumor, sell the news. Now, this one, the future is not in cars. I think we can all agree on that. On the price tag that Tesla's at right now, $442. I think I saw something about Elon becoming the first person to be worth $500 billion, right? Wouldn't be surprising when Tesla's worth $1.5 trillion by itself. And what's he need? He needs 25% of that company to be interested, right? That's what he's talked about. It's worth $1.5 trillion right now. But who's buying an electric vehicle after that goes away? And listen, there'll be people buying vehicles. But boy, it's almost like a situation of, can you imagine being the guy showing up trying to sell EVs and Teslas on the day after the credit goes away? You're just seeing so much demand get pulled forward. Anybody on the fence, I thought about it myself, because you're going to buy an EV, get in before it. And who's going to buy it afterwards? So yes, deliveries have ramped up. But I think the market said probably, hey, you know what? They probably didn't ramp up enough for the difficulty that it's going to face going forward. Take a look at the volume on Tesla. So we have some big volume the week of September 15th. You make a high of 432. Yeah, the real acceleration on September 12th and a volume on September 13th. We've climbed higher since then on a lighter volume. We're giving it back today, down almost 4%. So the valuation of AI stocks. OpenAI, they raised money at a $500 billion valuation. Not bad. Employees, current and former, selling about $6.6 billion worth of shares. NVIDIA. Amazing. Even NVIDIA, all-time highs. I say even, of course, NVIDIA. Now, you know what's remarkable here is NVIDIA's got volume here, okay? As in general, we got some nice volume here, right? The accelerations, look at the green volume on the green days. Now, today, no, we're not going to get the volume today. So that's a little worrisome. On a day where we're up more than a percentage, this is daily volume right now. We only got 45 minutes left. You got 112 million shares. We did 173 million the day before. Yeah. And 236 the day prior when you hit a high of 187.35. But I had this line on this chart kind of around this area where you just kept saying, on this way up here, you decline, just ever weakening volume to a certain degree. You reach a high of 182, 185, you get some selling in August around their earnings. Well, look at that strength on the 22nd. Maybe we come back, we test that 185 area. That's 184.55, folks. The high of September 22nd. But NVIDIA, all-time highs today. S&P's touching all-time highs today. NASDAQ 100, all-time highs. Gold, all-time highs. Come right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got markets in the green. Pretty remarkable, right? As I went through that. Markets in the green. Gold, you're talking about all-time highs. We jump over to Tesla. Not quite all-time highs. But jumping into the actual numbers here. And it's a beat, but surprised they weren't looking for even bigger numbers, and you get the sell-off that you do. They're up 7.4% year over year. 497,000 vehicles. The estimate was for 439. Okay, so imagine that we're getting a sell-off we're getting in Tesla today when the market expected 439. And we're currently sitting at 497. Pretty remarkable that you go back over multiple years, right? Years of growth. No years of growth. No years of growth. Even with all that pull forward, no years of growth, right? That's the third quarter of 2025. That's the second quarter. It is not cars, man. As in the future of that. Yeah, look at the market value gain coming into that. Whew. Buy the rumor, sell the news. It's one of the risks in this market right now, folks, of the valuations of the ever-present. Yeah, so it'll be interesting to see. I mean, who showed up yesterday to buy a Tesla? Right? And any electric vehicle. Who showed up? Can't imagine it. Even if you wanted one, you couldn't do it to yourself, right? How long is it going to take until you won't torture yourself by buying a Tesla, knowing that you just wasted $7,500 had you bought it September 30th? All right. Let's talk a little bit of Amazon. So, we're going to hear more about these as drones become the norm. Federal regulators probing Amazon's Prime Air after two of its delivery drones collided with a construction crane in Arizona. Now, when I saw this, right, I said, man, if you're worried about regulators cracking down on drones, which they are, then you really better be worried about self-driving vehicles, folks. Because these little drones cannot cause the damage that self-driving vehicles can. And boy, self-driving vehicles are going to make roads. They're going to. It's not an if, it's a when. Make roads dramatically safer. Roads are much more dangerous than probably most people realize. We know they're dangerous. But, you know, either way. We're going to have drones everywhere dropping off our packages, so they better. But yeah, an incident took place 1 o'clock. You had so and so. It's almost a nothing story, and of course they're going to. Of course, drones are going to hit a few things. Think about the stories that are going to come out for self-driving vehicles, folks. Okay, and it's tragic because tragedy takes place on the roads every day. This is not, that's the unfortunate part. They're going to probably get fair criticism and unfair criticism because of just the raw amount of tragedies that take place on the roads every single day in our country. And hey, we'll jump around to something else. But Amazon. You traded lower today. You're back above that area. You're up by 0.6%. On a weekly basis, you come back, you test those highs. You ramped up on the volume, but you couldn't break above the highs of September 8th. You couldn't break and finish above the highs of July 28th with volume. And you're coming into this area of 242 where you traded 244 million shares. You couldn't get above that area. Microsoft up a bit. Down a bit. We jump over to Apple. So talk about testing highs, right? Look at this. Apple up another 0.8%. So I was talking about this morning. Apple, they're ditching the Vision Pro. And I say ditching as in they're not accelerating the next version. They're going to focus on glasses to compete with Meta. And glasses are going to be the new watch, folks. They are. Glasses are going to be the new watch. The iWatch, the smartwatch, it's coming, man. And Mr. Zuckerberg, he's got a lead. Meta up by 1%. Jump over to Google shares, flat. Check out some of those chip stocks. NVIDIA shares, as I mentioned, hitting a high, all-time high on the open. Look at these equities, man. AMD up by 4%. Oracle, little volatility, flat on the session right now. Paramount Skydance in the red. Yeah, all the streamers right now in the red. Jump over to some retail. Walmart, look at that charge higher from 100 to 102. Back in the green. Target barely in the green. Mickey D's as well. Yes, they were talking about in the den. How about the GDX, man? We're going to get green. We'll see. We're talking to our man Tim Ward coming up after the next break. And we'll talk some gold. But how about this GDX? I pulled the numbers. The GDX, folks, intraday, this 78.32 pullback down to the low you had of 74.10. Okay? That's a $4.22 pullback, which is a 5.39% decline intraday. So the GDX has a 5.4% decline intraday, and you're 22 cents from being green on the session. That's some volatility for you. How about that spike, folks? Dollar not quite back to where you were, but we've had quite a recoil. We have the government shut down. You have Trump threatening, of course, to lay people off, whether it's furlough or firings. It's interesting that you get a dollar bounce, right, when the pressure may be on some weakness in the dollar. If the government shutdown persists, and boy, you got quite an acceleration on the day after. We peak above 98. But we're now 27 days out from the next Fed meeting, folks, and pressure is on the Fed to cut rates. And the pressure on this dollar is lower dollar. You look at the bounce we got from the Fed meeting, September 17th, you drive down to 96.21. It's been quite a little bounce. But another way to look at this is we're where we were on the Monday of that Fed meeting, folks. We're where we were the Monday of that Fed meeting. There's been a bounce, but the pressure is to the downside right now, I believe, when he's talking about. And, hey, that's going to be good for gold. You see it today, another all-time high. The cuts are coming right now. And one of the things, as the government's shut down, we're not going to get non-farm payrolls tomorrow for September. There'll be private jobs numbers like we got on Wednesday, right? ADP private payrolls, that is not affected by a government shutdown. It could be impacted, though, when they're benchmarking it, but we don't get as good inflation data. We'll get wage data in some of those numbers, but you don't get as good inflation data. And maybe that just allows the Fed to continue cutting, because maybe that's the one thing that might slow them down, actually. So we get a little higher price, lower yield, 4.08 on the 10-year, as we have weakness persisting in the dollar at 97.82 right now, but not in this market, man. Not in this market. The stock driving it, NVIDIA, up by another $2. Folks, they got 25 billion shares. That's $50 billion in market cap today alone. Up another full percentage point. I mean, what's remarkable is this is a $4.5 trillion company. So when you're up 1%, you're up $45 billion in market cap. Market's green. We're coming back with our man Tim Ord. Don't go away, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P's right now up by 6 points. That's 0.1% in the green. NASDAQ 100 up 101 points or 0.4%. And right now, as we do each and every Thursday, folks, at 30 past the hour, we're going to talk to our man Tim Ord. You can reach Tim at his website, ord-oracle.com. every trading day. And don't forget, under the Services tab, right at the front page at TFNN.com, you hit that Services tab, 2 outstanding webinars, The Secret Science of Market Tops, as well as 6 secret ratios every trader should know with Tim Ord. Tim Ord, good afternoon.
Good afternoon. Good afternoon. So here's what's kind of going on. This first chart is the 10-day average of the trend, and anything above 10-day average, so that's 2 weeks of trading. So anything above 1.2 is bullish. Anything below 0.9 is bearish. We're coming in, when I did this a couple hours ago, 0.89. And this one down here is a 5-day average, and it's coming in 0.9. And I listed, so this tan area, or pink area right here, and this pink area right here are times when the 10-day average of the trend is below 0.9 and the 5-day average is down below 0.9. So anyhow, we got the 5-day below 0.9, we got the 10-day below 0.9. And then went back in history. This chart goes back to basically close to a year. So marks all the times when those indicators, they pretty much line up the same time. I should have probably done the 5-day too, but in general, they kind of warn of a high coming if they not pick out the pretty high over the last several months. It kind of warns you the high is coming here. I was hoping that we'd see some strength in the trend as we got a buy signal here a couple of days ago. Not a real good one, but I thought it had strengthened if the market was going up. Sometimes these trends go up along with the market. That did not happen here. So I'm going to sell my position on the close today. I made probably going to be around 0.5% or so. Nothing great. But this is another indicator kind of.
Can I ask you when you jump in just how long? Because I can definitely see it, right? In terms of that dip as they dip lower, and it doesn't guarantee it, but you can see it. And sometimes you get in a run up ahead of time. Is there any amount of time that you look for a pullback or a stall out, or, because this market has been pretty relentless, right? And I understand, you're not necessarily going short and those pullbacks aren't steep, but they're on that chart. Wait, do you look for, a 5-day, a week? Is this a pause? How do you think about something like that when you look at something like this?
It's kind of hard to say. Next week is expiration week. Just what it is takes quite a bit of energy to the upside. It doesn't really go down sometimes. Sometimes it does. This time here, it really got low, and you got that. And this kind of lines up with that. And other times it's just a minor consolidation, those were kind of minor. Sure. So it just takes a lot of energy out to the upside. So can it pull back significantly? It can, but a lot of times it just says, there's no energy here. Basically panic's energy. And ideally you'd like to see a trend up around 1.2, and you get 10 days or you get 2 weeks of that. That builds up quite a bit of energy for the market to rally in a couple of weeks. Here, can we rally into expiration week or move sideways? Maybe. But I bet 2 weeks from now, we're not too much higher than where we are right now if we're higher at all. That's how I kind of determine it. So, but panic's good for the market. And right now, there's just really no panic at all. So it's we can wiggle up maybe, or maybe we just wiggle back down. I don't know. But here's another thing. This is the SPY VIX ratio. And this is the SPY. Over the last several days, market's gone up. This ratio is going down. I got a bullish signal here. It's one of the reasons why I went long, because market went down. This ratio actually made a higher high. And so, okay, we're going to get going to the upside. Well, we did go to the upside, and the ratio turned right back down again. So it's kind of a, worthless market. We had a trend tick reading here not too long ago. I guess the day I got long. So I'm out. It's just, in the volume, I don't think we'll be lucky yesterday to match yesterday's volume. So nothing really to talk about here yet. I think things will still get interesting this month, but the market just kind of staggers up here. So it's do you want to go short? No, I don't think so. This is really a strong market. Internals, we're just in a bad time of seasonality. September, October are probably they are two of the worst months of the market percentage-wise gains, or maximum losses. A lot of times big declines come in September, October. So we're kind of into that time frame, so I'm just being kind of careful here. But if we do get a pullback, there's a lot of momentum to the upside. The bigger trend's bullish. Just a short-term trend is not ideal. So let's take a look at the gold market. I brought this up on before. This is the monthly HUI NDX ratio. So you're measuring the gold market to the equity market. And this is what happened going back to 92, but this chart looks like it starts around 96. And there's potential for a 12-year cycle here. You only got two times before, but it worked out pretty well. What I like about it is this big run up we had. This is a sign of strength off of a low. Anytime you have a sign of strength off of a low, this is the first time this RSI, we're around 68 right now. But if you have a sign of strength, basically RSI can measure a sign of strength off a low because we're not dealing with volume here, but there's other ways to measure momentum, and RSI is one of those ways. And last time we got up to this high came off the 2000 low, and that RSI stayed above 50 going into 2011, 2012 high, then finally fell back down, then basically stayed below 50 from basically around 2011 until 2024. Mid 2024, looks like August or something, we got above it. So I'm thinking, so that hasn't happened since 2012. So we stayed below the RSI for almost 12 years, and finally we got above it. So I'm thinking this is initiation of an up move. I think the equity market may go up, but won't go up as fast as the gold market is what I'm saying. So anyhow, so I'm thinking there's a character change too. I was short GDX here a couple of months ago. I can't remember exactly when. And those indicators in the past have worked over the last, there's the music. So
that's all right. We'll finish it up. All right. We're going to talk some gold, folks, coming up after the break. We'll finish the conversation with Tim. And this gold market, you talk about it. Where are we right now? Let's pull it up. We got gold 38.81. We hit an all-time high in the futures, 39.23 today. We'll come right back with Tim. Stay tuned, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We have the S&Ps selling off a little bit, still positive by 2 points, but a little bit of sell in the last few minutes. Gold right near record highs, and we're talking to our man Tim Moore. Don't forget, you can reach him at his website, ord-oracle.com. And as you were saying with gold, Tim, go for it. I know we jumped right into the middle of that break. Go for it, please.
All right. Anyhow, I want to point out this, too. This is the first time we made a higher high on this ratio, HUIDX ratio. Well, actually this month. So now we're breaking higher highs. Before, we always made lower high, lower low, definition of a downtrend for the last 12 years. And finally, we broke above some previous highs. So kind of reinforces the idea that the gold market is here to stay, I think. Can it be a 12-year cycle? It's hard to say. I would say yes, because I think this is quite a coincidence that this pattern worked out so well. I actually had this drawn before this low actually happened, and it turned out to be right on the money pretty much. So anyhow, I think it's working as it'll work until it doesn't work. And one reason that it may not work is with the RSI up in this window here. We fall, say we fall down to around 30 or something, or 40, or 45 is kind of no man's land. But we fall down around 35 or something, or close to 40, then that may blow this cycle up. I'll put it that way. But as long as this ratio holds above 50 range and bounces around, I think this uptrend will continue. So that'll be one thing. So I'll be watching this RSI, how that performs. So, but anyhow, I think we're in early stages of bull market, and there's quite a few reasons to suggest that. This is a monthly XAU gold ratio. So you're measuring gold stocks against gold. We had pretty much of a downtrend starting basically in 2000 as far as the ratios go. So anyhow, this ratio is pretty cheap. So it's been bouncing around like approximately 0.08 is the high, 0.05 is the low, and we're up around close to 0.08 right now. I don't think it's actually going to stop there. What I think we're going to do is go right up to these lows back in here, and what happens there, I don't know, but I'm thinking that's what's going to happen, because I think this rally is, I think it's initiation, a sign of strength off of a low. They usually don't blow out. They have consolidations, but I think this ratio is going to keep going up. So I think we're going to break out of this sideways trading range that we've been in for the last 10 years and start to break up. And it's about due time, too, because a lot of these previous ranges, some lasted, this 2-year range, a 4-year range there, a 6-year range there is a 2-year range. So we're due something different than this 0.05 to 0.08 range. I think we're going to break out.
And what's crazy is not crazy, but it's remarkable how even on the point you're talking about it could break to, that would be almost like doubling, right, from almost where we are now in terms of the relationship, the XAU to gold.
Right. Yeah,
almost
gold
double.
Yeah, if gold just stayed where it is right now, to get that ratio, I don't have a yeah, to get
pretty
that
close.
ratio, yeah, if gold didn't even move for the next several years, and this ratio went to 0.175, that would mean the XAU would have to go, it's approximately around 300 right now. It would have to go to 600.
Yeah,
so
that's
you're right.
which is wild, man. And hey, yeah.
Yeah, so that's
I mean, for the run we just had, well, why not, right? We just went from 100 to 300 from last year. So
yeah. So I'm thinking these golds, where is there a penny market? I don't, there's no other penny market, I think, other than these gold stocks, but we'll see how that works out. But yeah, you're right. Just without gold moving, this ratio goes, if it does go to 0.75, if you do the numbers, then XAU would have to go to 600. So I know it could be very interesting.
Just talking about even a gram of gold right now, right, is like $137 at the price. 1 gram of gold. Remarkable, man. I was looking at that even.
Another thing, nobody's talking about it. You're not hearing the on the news or anything, which is really good. When they figure it out, that's usually a time you got to treat out. And I'm not even hearing anything. And this is one of the best, probably the best market percentage-wise out there of all sectors over the last 12 months. And nobody
It's
even
been an
cares.
amazing run, man. It has.
Yeah.
It's I wonder myself, just thinking out loud, right, in terms of people, you're saying we're not hearing a lot about it, and I agree. And, I wonder how many people know actually how much gold they have right now. When you look at even a gram, folks, is $140. I mean, when I'm dating myself, but not that long ago, man. When I graduated college in 2022, Tim, a full ounce of gold was just $220 or something like that. I remember it was right on the time. And now a gram is $140. Yeah. Remarkable.
Yeah, I wish your dad was alive because he'd be enjoying this right now. He was really into the gold. Yeah. So,
he would, and he, what was remarkable was, when he passed, actually, that gold was at all-time highs remarkably last year, right at that time, which is amazing enough, even on that day. I remember talking about it, saying, I come back and gold's at all-time highs, and then, hey.
Yeah. It's really something. So we got a couple of minutes here. I want to pass. This is the monthly silver gold. So we're doing a bunch of different ratios, and this is another evaluation. So this is a valuation of gold stocks to gold, and this is a valuation of silver to gold. I flipped it. A lot of times you use the gold silver. Silver gold kind of matches up with the direction of the XAU. Is the reason why I use that.
Yeah.
And relatively speaking, so anything below 0.012 is usually a buy, and that's at our pink area. I go back to this is 2000 or actually 1982, and anything below it's usually silver's cheap compared to gold below this ratio. Well, this ratio is still cheap. It's still below. When it gets above 0.018. It's when it gets kind of expensive, and that's when you get these highs in the market. That didn't high there, but I can't remember what. I was playing gold back in 82. I think this was a high back there too. But silver gold ratios is even still cheap, silver compared to gold.
Amazing.
So when it gets up here, up in this purple area, are times, a lot of times you're going into some sort of a high. So we'll see how that works out. But, this is still cheap. This is not inflated yet. So let's look at the real short term. This is the bottom window is a 50-day average of the up-down volume. And we obviously had a surge off of a low. To me, sign of strength off of a low, a lot of times those things are the initiation off of a low. In other words, sign of strength off a low suggests a major uptrend has begun. And I'm surprised this 2016 range didn't go further. It kind of went up, but that was the final. That was actually the low, and the market did go up. But this one, to get that surge sign of strength off of low, this ratio has to get up around 30, and then we hit right at 30 on this last rally. Even though we're way the heck up there, this is another indication that we do have a sign of strength off of a low. So this is still in the early stages, in my opinion, of a bull market. So.
There's a lot of strength, man, and that silver market.
Yeah.
There's volume in gold, and man, the volume in silver is just remarkable too on this whole way up. Tim, thank you so much, man. Great education, great walkthrough as always, folks. Check them out, ord-oracle.com, and check out those webinars on the services tab. Tim, we'll talk to you on Tuesday. Have a great weekend, man.
All right.
Take care, folks. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out, like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And in the race for AI, so Perplexity, if you recall, they came out and said, we'll buy Chrome if they were going to have to divest, and Google did not have to divest, but they made an unsolicited bid for $34.5 billion for Chrome. Well, now they're allowing everybody to try their Comet. So this is their own browser, okay? And it is interesting to see, man, if Google gets lapped. Myself, I've talked about it, the amount that I use ChatGPT now versus using Google. So this was originally just available starting in July to their max subscribers for $200 a month. Now it's free. Yeah, and they had a huge waiting list for it, and now it's free. And, of course, you have Gemini as part of the Chrome browser. Anthropic announced a browser-based AI agent in August. And OpenAI has Operator, an agent that uses a browser to complete tasks, in January. But, yeah, Comet. I'll have to try that one out. So markets barely hanging on to green. NVIDIA up by 0.9%. Google how about that acceleration for Google from the April lows? The first drive, a pullback, and then almost to the 2.618 expansion. Tough day for Tesla. You do it on volume. You take out the recent highs. You're rejecting this high we had from December. And the tougher story is that was a good number today. You know, the estimates of how many vehicles they were going to deliver, the estimates knew there was going to be pulled forward demand. The market still said, no, we're trading down by 5%. Who's going to buy a car? There's no more EV credit, folks. It was done. S&P is positive by 1. We make all-time highs today, as I mentioned, across the board. Gold down by $17 right now. The GDX almost got it back, down by 26 pennies. Folks, thanks so much for tuning in, spending your day here at TFNN. Have a great night. Have a safe night. Enjoy it, folks. We'll see you tomorrow morning at 9 o'clock for the morning market kickoff. Have a great one, folks. Take care.
Building wealth